I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, Wall Street wobbles after weak Chinese data and that move by Moody's. More details in a moment. Miners and automakers likely to head lower in the US after that Chinese data. And earnings continue to dominate with Lyft, Rivian and UPS on deck. Well, good afternoon. A warm welcome to you to this new edition of Beat the Street. Not long now before Wall Street starts trading, this is how equity markets are looking. Just showing you the chart here. As I mentioned earlier, we are looking at this grind higher continue, and the grind higher has confounded many analysts and market watchers out there. And it is also feeding into this hope that the soft landing, or rather the US economic soft landing, can be achieved. Futures, though, pointing to a lower open for the coming session on Wall Street. And this would mean that they would snap a 4-day losing streak. Moody's cutting its credit ratings on mid-sized US banks, and also that data out of China, which showed that exports and imports there slumped, not exciting investors. In fact, causing some of them, at least in the European session, to run towards the exit. We also have some breaking news just crossing the monitor right now. The goods trade balance. This is for the month of June, coming in at 88.8 billion. The prior reading for the month before was 87.8, negative 87.8 billion. The reading for June, negative 88.8. And also reading out the international trade figure for June, the expectation was for negative 65, and the actual was a bit deeper than that, negative 65.5, after a reading of negative 69 billion in the previous month. Now, all this pointing at a continued weakening of that trade figure. Also, the other big news, as I mentioned, is Moody's. It cut the ratings of 10 banks by one notch and placed 6 banking giants. They include Bank of New York Mellon, US Bancorp, State Street, and Trust Financial on review for potential downgrades. Just showing you this graphic here to encapsulate what's happened, which has shaken the markets. The ratings agency also warning that the sector's credit strength is likely to be tested by funding risks and weaker profitability. Just showing you some of the all-session stocks that you can trade on the IG platform, Bank of America being one of them. And after that news, it's down 1.5%, as you can see there. Also checking in on Goldman Sachs, another all-sessions stock on the IG platform. And a similar picture there, Goldman Sachs shares down almost 1%. China's data, also a big factor weighing on markets. Chinese imports and exports, those data points fell and weighed on trading. Many of the auto stocks and the mining stocks in Europe wilted. That's the reaction across many of those sectors. We are also looking to the reaction on Wall Street after those weak Chinese figures. As I mentioned earlier, the indication is for a slightly lower open. But how did Europe fare? Well, IG Chief Market Analyst Chris Beecham has more. Chris?
It's been another gloomy morning for European markets. That China trade data overnight, much worse than expected performance in both imports and exports, really causing worries that the Chinese economy is entering a much tougher phase. And of course, there's no yet any sign of any real stimulus program for the Chinese economy from Beijing. So investors taking a bit of fright this morning after a much more positive day, particularly for US markets on Monday. European markets definitely under pressure, and that negative tone appears to be seeping through to US markets, which really now are in wait and see mode ahead of Chinese and US CPI later this week.
Thanks, Chris. United Parcel Service, one of those that we're also keeping an eye on. It cut its 2023 revenue forecast, hurt by weakening e-commerce demand and also from an improved labor contract it offered workers. sending its shares lower in pre-market. Many of the factors that I mentioned earlier, just showing you this graphic here, has actually been flagged prior to this. However, that sales forecast cut for 2023 comes as many companies in this sector are also indicating pain in terms of their outlook. We've heard from DHL that have said that the route between China and Europe and the US, both Europe and US, of course, the biggest trade partners with China, are weakening. And also we're seeing Maersk in this week alone saying that it's also warning on its outlook because the global picture in terms of container trade has weakened. Meanwhile, I just want to talk to you about Under Armour as well, because it's out with earnings, a surprise first quarter profit, and also the company beating revenue estimates. This is as cost pressures eased. Under Armour, like many of the brands out there, and any company that's related to consumption, consumer confidence, they've been hit by the rise in costs. And just want to show you the chart here. Under Armour, as you can see, there has seen a great deal of volatility. And although it is looking like it might rise on those results, it is nowhere close to where it was trading back in February. That's where we saw in early February that it hit that 1290 level. Gross margins fell 60 basis points to 46.1% in the quarter compared to a year earlier. However, the company's overall expenses did fall. Now, after the market close, we are keeping an eye on the ride-hailing space closely for you. We've got Lyft coming out with earnings, just showing you a preview of what's expected. Second quarter sales seen growing at the slowest pace since 2021. Also, watch out for any comments on the market share against Uber, which is its chief rival. Investors also looking out for any comments on pricing after Tesla reduced its prices of its vehicles. Now, Rivian Automotive, staying in the auto sector, is expected to also come up with earnings. As you know, in this space, especially at Rivian's R1T, there are just a few contenders. There's Fiskars Alaska and also Tesla's Cybertruck. All three are jostling for dominance, and the Alaska will join the fast heating electric pickup market slated for production early in 2025. Watch out for what the company says about the delivery of more vehicles in the quarter, and also the revenues. Investors wanting to know about margin management and how the demand environment is faring, given that the company is having to cut costs in order to keep profitability up. And of course, the big set piece in terms of US economic news are those inflation numbers that we're waiting on. Let's take a quick look at the dollar basket for you as we wait on that. There we go. We've seen this financial instrument slowly move higher since about this point here in July. However, it's hit a resistance point at around 10.225. If it breaks past that level, I can show you in my chart that the next level that it will be headed towards is around 10.300. The dollar, of course, is dependent on what the Fed does. And at the moment, the market is factoring in that the Fed is very close to the peak of this current tightening cycle. Now, before we part, a last look at how the market is looking. We're now minutes away from the open. Wall Street still, although it has climbed to highs unimaginable at the start of this year, it is looking at perhaps a weaker start when the main session starts going. And that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.